Hello, English learners, and welcome back to English Pod. My name is Marco.
And my name is Catherine, and today we're talking about money, but this time we're talking about borrowing money.
Right, so we're asking for money. We're going to the bank, and we are asking for a loan. But before we go, why don't we take a look at vocabulary preview?
Vocabulary preview.
Okay, so a loan is some money that you get from the bank, so we're talking about requesting a loan today.
All right, so you request for a loan or you ask for a loan.
Exactly, so to request is to ask.
Okay, very good. And that's the word that we have for vocabulary preview, so let's listen to the dialogue for the first time.
Hello, sir. May I help you?
Yes, I would like some information for requesting a loan.
Very well. Here are the general terms of our loan policies. We pride ourselves in having the lowest interest rate in the country for personal loans.
I see. So let me get this straight. If I borrow, let's say, $10,000, how much will I have to pay each month?
It depends on how long you take to pay it back. If we lend you $10,000 at an annual interest rate of 10% for 48 months, you would have to pay each month a portion of the loan, which is called the principal, and another small portion of the annual interest rate. This, of course, is considering that you don't default on a payment.
It sounds good, but there's just one problem. I have a terrible credit score.
That is a very serious problem, you see. The bank must assess your personal information, past loans, assets, and any other relevant information, such as your credit score, in order to approve your loan.
You know what? I don't really need the money. Thanks anyways.
All right, we're back. So now why don't we take a look at some of the key words that we'll find in language takeaway.
Language takeaway.
All right, so on language takeaway today, we have a couple of different words. Why don't we start off with the loan policies?
Okay, so a policy is like a rule. For example, a government can have policies, but in this case, a loan policy is the rules regarding the loan that you have.
Right, so maybe the loan policies could include how long, what's the maximum length of your loan, or maybe what's the annual interest rate, etc.
How much you have to pay each month, like
Exactly.
that. So a loan policy is the rules related to the loan that you've taken out. And we have some very, very important words following this, and they go together. So the first word is to borrow.
Okay, so you probably know this word already, to borrow. So can I borrow your pen? Can I borrow some money?
Sure, let me give you my pen, let me give you my money.
Okay.
But wait, giving is different, because giving means I don't have to get it back.
Right. So if you want to give it to someone temporarily, then you lend them your pen or you lend them some money.
Great. So to borrow is to take something from someone knowing that you will have to give it back later.
Right.
And to lend is to give it to someone, right? So can you lend me your pen? That means, can you give it to me, please?
Right. And this is a common mistake with language learners, especially English learners, that they make the mistake of using borrow instead of lend. So, can you borrow me some money? Right. So, can you lend me some money?
Sure, but I expect you to pay me back later.
Okay, very good. And if I pay you back later, I'll include an interest rate.
Will you really?
No, not really.
No, not really. Mostly it's banks that ask for an interest rate. So in this case, an interest rate means the amount of money that a bank will charge you in addition to the money that you owe them.
Exactly. So it's called an interest rate, and it's a rate because it's a percentage. So
Like
it's usually-
5%.
Exactly, 5-10%. That is an interest rate. And now moving on, if you have a loan and you have to pay each month, be careful to not default on your payments.
Okay, default. In the banking world, this means to not be able to pay your loan. So that means that if I owe $1,000 to you, Bank of Marco, and I don't have the money, I can't pay for it, then I default.
So to be late or to not make the payment.
It's a verb, to default.
Very good. And well, the person asking for the loan has a small problem. His credit score is not very good.
Okay, I think he calls it terrible. And one of the ways that you get a terrible credit score is by defaulting on a loan. But
Right.
it also means that maybe you borrow money or you have credit cards and you can't pay off your bills. And so a credit score is very important in America, and it's like a report card for your finances.
Right. So, for example, if your credit score is a report card and you have an A credit score, that means that the banks won't have a problem with lending you money. Or if you want to buy a new car, it'll be okay. But if you don't pay your bills on time or you default on your loans, then maybe you'll have a C or a D, and then people will not really lend you money in the future.
They won't trust you.
Exactly. All right, so that's credit score. That's all the words we have for Fluency Builder. Why don't we listen to the dialogue again, and we'll be back shortly.
Hello, sir. May I help you?
Yes, I would like some information for requesting a loan.
Very well. Here are the general terms of our loan policies. We pride ourselves in having the lowest interest rate in the country for personal loans.
I see. So let me get this straight. If I borrow, let's say, $10,000, how much will I have to pay each month?
It depends on how long you take to pay it back. If we lend you $10,000 at an annual interest rate of 10% for 48 months, you would have to pay each month a portion of the loan, which is called the principal, and another small portion of the annual interest rate. This, of course, is considering that you don't default on a payment.
It sounds good, but there's just one problem. I have a terrible credit score.
That is a very serious problem, you see. The bank must assess your personal information, past loans, assets, and any other relevant information, such as your credit score, in order to approve your loan.
You know what? I don't really need the money. Thanks anyways.
All right, we're back. So now why don't we take a look at 3 key phrases on Fluency Builder.
Fluency Builder.
Let me get this straight. We're going to do Fluency Builder?
That's right.
Wait. So, okay, so this is our first phrase. Let me get this straight. And this is a fixed phrase. That means we always say it the same way. Wait, let me get this straight. We always say it the same way?
Right, so you're asking for a confirmation, or you're repeating what that person said just to be sure that it's correct.
Exactly. So maybe you don't understand something, or maybe you think you might have misunderstood. You say, hey, so let me get this straight. And you repeat what the person just said. It's a way for you to, like you say, get confirmation on what you've heard.
Very good. Let me get this straight. And now moving on, we have the phrase, pay it back. You have to pay it back.
Okay, and so in this case, we have the verb to pay, but we also have the word back. So pay it back means to repay. So if we take out a loan, we obviously have to pay it back to the bank.
Right, so you have to pay the loan back.
Okay, so just remember that these words often go together, to pay it back. I'll pay you back, I promise.
Right, can you lend me $1? I'll pay you back tomorrow.
Don't worry about it.
All right, and the bank started off saying, we pride ourselves in having the lowest interest rate in the country.
Yeah, right.
All right, so we pride ourselves. What does it mean if I pride myself in something?
The word pride means to be really happy about something that has to do with yourself. So something that you're proud of is something that you want to tell a lot of other people about. So for example, a father may say, my son just got straight A's and he's an excellent soccer player. And so he's proud of his son. But to pride oneself means to be really happy with the way that you do something.
Right. So for example, if I've never smoked, right? So I can say, I pride myself in being a non-smoker.
Or I could say, I pride myself in always saving lots of money for my paycheck.
Very good.
So it means I try to do this because I know it's a good thing.
But you feel very good about this, and you feel that, people should be proud of you as well.
So we could ask our students here, what do you pride yourselves in as a challenge?
As a challenge for the website. All right, so why don't we listen to the dialogue for the last time, and we'll be back.
Hello and welcome to the English Podcast Zone. I'm so glad you're here with me today. We're diving into one of the most practical and valuable topics for real-life English use, borrowing money and navigating the world of loans. Whether you've ever needed to ask for money from a friend, get a bank loan, or just want to understand how people talk about finances in English-speaking countries, This episode is packed with useful natural language you'll hear and use in real situations. Let's start with the basics. What exactly is a loan? In everyday English, a loan is money you borrow, usually from a bank, with the promise to pay it back over time. That sounds simple, but there's a lot of vocabulary and structure around this topic that can be confusing for learners. First, remember these two key verbs, borrow and lend. These are often mixed up. If I take money from you and promise to return it, I borrow it. You, on the other hand, lend it to me. For example, can I borrow $50 and can you lend me $50 mean the same thing but from different perspectives. So practice those two carefully, borrow and lend. Now, when you borrow money from a bank, it's rarely free. You have to pay extra for the privilege of using their money. That extra cost is called interest, and the percentage rate they charge is called the interest rate. This is usually shown as a yearly percentage, known as the annual interest rate. For instance, if you take a loan of $10,000 at an interest rate of 10% per year, you'll end up paying more than $10,000 back over time. Understanding this helps you make smarter financial decisions. Another important term is principal. Principal is the original amount of money you borrowed, not including interest. Every time you make a loan payment, you're usually paying back a part of the principal and a part of the interest. Then there's the scary word, default. To default on a loan means you fail to pay back what you owe. In the English-speaking world, this can seriously hurt your credit score. A credit score is like your financial report card. If it's high, banks trust you. If it's low, getting loans, renting apartments, or even getting a job can become very difficult. Let me give you a very useful phrase here. Let me get this straight. It's used when you want to confirm something or make sure you understood correctly. For example, let me get this straight. You're charging 10% per year on a $10,000 loan? It's a great phrase to show you're listening and thinking carefully. When someone tells you about a loan, they may also mention loan policies. These are the rules set by the bank. How long you have to pay, how much interest you'll be charged, what happens if you miss a payment, and more. Always ask about the general terms before signing anything. This is a rich topic, and we're just getting started. In this episode, you've learned the key verbs borrow and lend, the concept of interest and interest rate, what principal means, the risk of defaulting, and the importance of a credit score. Plus, you've picked up useful real-life phrases like, let me get this straight. Stick around, we'll keep exploring more angles, vocabulary, and useful tips to help you talk confidently about money in English. When it comes to borrowing money, one of the first things you'll hear is the phrase loan application. This is the official request you make to a bank or lender to borrow money. It might sound formal, but it's something millions of people do every day, for buying a car, starting a business, or even just covering unexpected expenses. So, learning how to talk about it naturally in English is incredibly helpful. Filling out a loan application involves giving a lot of personal information. You'll be asked about your job, your salary, how long you've been employed, your monthly expenses, and whether you have any other loans. This is where the term assets comes in. Assets are things you own that have value, like a house, a car, or even savings in your bank account. Lenders want to see your assets to determine whether you're financially stable enough to pay back the loan. Now, one common phrase you'll hear in this context is, assess your eligibility. That simply means the bank wants to evaluate whether you qualify for the loan. They'll look at your credit history, which is a record of how well you've handled borrowed money in the past. Do you pay on time? Have you ever defaulted? Do you carry a lot of debt on your credit cards? All of this affects your creditworthiness, a key word that means how trustworthy you are when it comes to borrowing money. You'll often hear questions like, what's your monthly income? Or do you have any outstanding debts? In natural English, people might say, do you still owe money on that loan, or are you paying off any other loans right now? Notice the phrasal verb pay off. It means to gradually pay the full amount of a loan over time. For example, I finally paid off my student loan last year. That's a huge milestone for many people. Speaking of monthly payments, there's another key term you'll need, installment. An installment is one of the regular payments you make toward your loan. You might hear someone say, "My loan is broken down into 36 monthly installments." That means they're paying every month for 3 years. Understanding this term can help you make sense of loan offers and avoid confusion. Let's not forget the idea of loan approval. After you apply, the bank takes time to review your information. If everything looks good, they'll approve the loan. If not, they may reject or deny it. This is often a tense moment, especially for people who are relying on that money for something important. And here's a cultural tip. In many English-speaking countries, being open and honest about your finances is expected when applying for a loan. Hiding information can cause your application to be rejected immediately. So, honesty really is the best policy. Another common phrase that's worth remembering. So today we added even more to your money vocabulary. Loan application, assets, assess eligibility, creditworthiness, payoff, installment, and more. You also saw how these words are used in real-life sentences and learned some natural expressions to help you sound fluent when discussing money matters. Understanding this topic isn't just about English, it's about learning how the financial world works in English-speaking countries. And that kind of knowledge is power. Let's talk about something that affects almost every decision a bank makes when you request a loan: your credit score. This little number has a big impact on your financial life, especially in countries like the United States, Canada, and the UK. So what exactly is it? A credit score is a 3-digit number that tells lenders how reliable you are with money. It's based on your credit history, how often you borrow, how quickly you pay back, how much debt you carry, and whether you've ever missed a payment. In natural English, you'll hear people say things like, "My credit score is great," or "I need to improve my credit before I apply for a mortgage." Now, if your score is high, it's a good sign. It means you pay your bills on time and don't take on too much debt. Lenders are more likely to trust you, offer better interest rates, and even approve higher loan amounts. But if your score is low, that can lead to problems. You might hear phrases like, "I was denied the loan because of my poor credit," or "They offered me a loan, but the interest rate was really high because of my bad credit." That's right, interest rates are often tied to your credit score. If your credit is bad, lenders see you as a risk. To protect themselves, they charge more interest. This means you'll pay back a lot more over time than someone with better credit. That's why improving your score is so important. So how do you build good credit? First, pay your bills on time every time. Even being late by a few days can damage your score. Second, avoid maxing out your credit cards. That means don't spend up to the limit. A good rule of thumb is to use less than 30% of your available credit. Another phrase you'll hear is establishing credit. This is important for young people or new residents in a country. Without a history, banks don't know how trustworthy you are. To fix that, people often start by using a secured credit card or taking out a small loan they can repay easily. Here's a great idiom for this situation: you have to spend money to build credit. It might sound risky, but it just means that by borrowing small amounts and paying them back responsibly, you actually gain more trust and financial opportunities in the future. You may also hear the term credit limit. That's the maximum amount you can spend on a credit card. If you go over it, you can face fees, higher interest, and, of course, a drop in your credit score. Let's bring in one more useful phrasal verb: pay off your balance. This means to pay the full amount you owe, not just the minimum. Smart, because paying only the minimum keeps you in debt longer and adds more interest. So today you've learned about credit scores, credit history, credit limits, building credit, and key phrases like max out, pay off your balance, and establish credit. These are not just banking terms, they're everyday English expressions you'll hear when people talk about their finances, their goals, and even their struggles. If you want to live, work, or study in an English-speaking country, understanding credit is essential. And even if you never move abroad, this vocabulary will make you sound more fluent and informed when talking about money in English. Now let's focus on something many people find confusing when borrowing money: the terms and conditions of a loan. These are the detailed rules that explain exactly how the loan works, and they're incredibly important to understand, not just for your finances but for your English too. One of the most important parts of any loan agreement is the loan term. This refers to how long you'll take to repay the loan. Could be short-term like 12 months or long-term like 30 years for a mortgage. A useful phrase you might hear is, the loan term is 5 years. That means you'll make regular payments for 5 years until the full amount is paid off. During that time, you'll be making monthly payments, often called installments. Each installment includes 2 parts: the principal, that's the original amount you borrowed, and the interest, the extra amount the lender charges you for borrowing their money. When someone says, my monthly installment is $400, that includes both the principal and the interest combined. Here's a common expression you might hear in this situation. What are the repayment terms? This refers to how much you pay, how often, and for how long. Always ask this question before signing any loan document. And that brings us to the phrase, read the fine print. This is a common warning in English. The fine print refers to the small text at the bottom of a contract that contains the less obvious, but often very important details. For example, make sure you read the fine print before signing the agreement. Why? Because the fine print may include hidden fees, penalties for early repayment, or strict conditions you didn't notice at first. Another key phrase is early repayment penalty. Some loans charge you a fee if you pay off the loan too soon. It might sound strange. After all, isn't paying early a good thing? But for some lenders, early payments mean they earn less interest, so they add a penalty. That's why it's so important to understand the contract completely. Let's also talk about collateral. This is something valuable, like your car or house, that you promise to give the lender if you fail to repay the loan. It's common in secured loans where the lender needs a guarantee. You might hear, I had to put my car up as collateral. That means if you default, the bank can take the car. On the other hand, unsecured loans don't require collateral, but they usually come with higher interest rates because the lender is taking a bigger risk. Another useful term is loan default, which we've mentioned before. To default means to stop making payments. And once that happens, the bank may take legal action, charge extra fees, or seize your collateral. So far, we've covered essential terms like loan term, monthly installment, principal, interest, fine print, early repayment penalty, collateral, secured loan, and unsecured loan. These are real, useful expressions you'll hear in everyday conversations, in the news, and definitely at the bank. Being able to understand and use this vocabulary fluently helps you not only avoid financial mistakes but also communicate confidently in English when dealing with complex situations. Always ask questions, always read the fine print, and always know what you're agreeing to, both in English and in life. Let's move deeper into the world of borrowing by exploring how interest rates affect the total cost of your loan. Understanding interest rates is key to making smart financial decisions, and it's also an area where a lot of useful English expressions are used. So, what exactly is an interest rate? In simple terms, it's the cost of borrowing money expressed as a percentage. If you borrow $10,000 at a 10% annual interest rate, you'll pay an extra $1,000 over the course of a year. But here's where things get interesting and a little more complex. In everyday English, you'll hear people ask, what's the APR on this loan? APR stands for annual percentage rate, and it's the total cost of the loan including interest and any additional fees. Gives you a more complete picture than just the basic interest rate. So, if a loan has a 7% interest rate but hidden fees raise the cost to 9%, the APR is 9%. One phrase you'll hear often in this context is fixed rate versus variable rate. A fixed interest rate stays the same for the entire loan term. This makes your payments predictable. On the other hand, a variable interest rate can change depending on market conditions. People might say, my mortgage has a variable rate, so the payments went up this year. Now, when comparing loans, people often say things like, shop around for the best rate. That means don't take the first offer you see. Compare several options to find the lowest interest and the most favorable terms. Another expression you'll hear is lock in a rate. This means to secure a specific interest rate before it changes. For example, I locked in a 5% rate before the bank raised it. Let's also talk about compound interest. This is a financial concept that many people find confusing, but the English around it is commonly used. Compound interest means you pay interest on the original loan plus any unpaid interest that has already been added. Can make loans much more expensive over time. A phrase you might hear is, the interest keeps piling up. That means the total amount you owe is increasing faster than you expected. People also talk about being in debt. This just means you owe money. It's very common to hear someone say, I'm in so much debt because of my student loans. Or, I'm trying to get out of debt as quickly as possible. These expressions are practical and very common in real-life conversations. And then there's the idea of refinancing. This means replacing your current loan with a new one, usually to get a better interest rate. For example, I refinanced my mortgage to lower my monthly payments. It's a smart financial move if interest rates drop or if your credit score improves. In this part, we've added valuable financial English to your toolkit: interest rate, APR, fixed rate, variable rate, shop around, lock in a rate, compound interest, being in debt, and refinancing. You also picked up some useful expressions that you'll hear from real people, not just in textbooks. The more you understand how money works in English-speaking countries, the more confident you'll become when talking about these things in English. And remember, it's not just about learning words, it's about understanding how those words are used in context. That's what builds true fluency. Today, let's explore a more personal and emotional side of borrowing money, asking for a loan from friends or family. While most people think of banks when they hear the word loan, in real life, many loans happen informally between people who know and trust each other. And talking about money in these situations requires not just good English, but also sensitivity, respect, and clarity. So how do you ask someone you know for a loan in a polite and respectful way? One natural way to begin is with something like, I was wondering if you might be able to help me out financially. This softens the request and shows that you're not demanding anything. It's also common to hear, do you think you could lend me some money for a short time? Or, I hate to ask, but I'm in a bit of a financial bind. These phrases use soft language and show humility, which is very important in English-speaking cultures when discussing personal finances. People often avoid being too direct when money is involved. If you're the one being asked for money, you might reply with, can I ask what it's for? Or, how soon would you be able to pay me back? These questions are not rude, they're expected. Lending money, even between friends, is still a financial decision. And phrases like, I'd feel more comfortable if we wrote down the agreement, are perfectly normal. It helps protect the relationship and keeps expectations clear. This brings us to the idea of a personal loan agreement. Even when borrowing from a friend, it's a good idea to put the details in writing. How much is being borrowed? When will it be repaid? Will there be any interest? You might hear someone say, let's keep this professional just to avoid misunderstandings. It's not a sign of distrust, it's about being clear. Now, sometimes people agree to lend money without setting any conditions. In that case, you might hear, pay me back whenever you can, or no rush, just take care of yourself first. This kind of informal lending is based on trust, but it still helps to communicate openly. However, when things go wrong, when someone doesn't repay, you might hear more serious expressions like, I'm really disappointed you haven't paid me back, or it's been months, what's going on with the loan? These conversations can be uncomfortable, but the language used is often firm yet polite. Phrases like, we had an agreement, or you gave me your word, are common ways to express frustration without being aggressive. Let's also look at the idiom, money and friendship don't mix. This is a common warning in English. It means that borrowing or lending money between friends can sometimes damage the relationship. It's not always true, of course, but it's a phrase you'll hear often when this topic comes up. In this part, we explored practical language for informal loans, polite ways to ask for help, clear ways to discuss repayment, and respectful ways to deal with uncomfortable situations. You also learn common phrases like financial bind, give your word, put it in writing, and the idiom money and friendship don't mix. In English, money talk is often emotional as well as practical. That's why it's important to learn not only the vocabulary, but also the tone and culture behind it. It helps you sound not just fluent, but thoughtful, respectful, and wise. Now let's shift our attention to one of the most common types of borrowing, using credit cards. Credit cards are a normal part of life in many English-speaking countries, and they come with their own set of vocabulary, expressions, and habits that you need to understand to speak naturally about money in English. First, what is a credit card? In simple terms, it's a card that lets you borrow money up to a certain limit called your credit limit and then pay it back later. Every time you use your credit card, you're technically taking a mini loan. If you pay it back in full by the due date, you usually don't pay any interest. But if you delay payment, interest charges start adding up quickly. In real-life English, you'll hear people say things like, "I put it on my credit card," meaning they didn't pay with cash or debit, they borrowed the money. You'll also hear, "I need to pay off my credit card balance," which means they're working to repay the amount they owe. Here's a great phrasal verb, rack up. To rack up charges means to keep adding more and more expenses to your card. For example, I racked up over $2,000 on my card last month. This is usually not a good thing, it suggests you spent too much. One more expression to learn is carry a balance. This means you didn't pay your full bill at the end of the month, so the remaining balance carries over and you get charged interest. For instance, I try not to carry a balance on my card, those interest rates are brutal. Now, every month you'll receive a credit card statement. This is a document, either on paper or online, that shows what you spent, how much interest you owe, and what your minimum payment is. The minimum payment is the smallest amount you have to pay to avoid a late fee, but it's usually not enough to reduce your debt significantly. In fact, paying only the minimum is a common trap. You'll hear warnings like, "If you only make the minimum payment, you'll be in debt forever." That's why smart credit card use is all about paying your balance in full and on time. Another phrase that often comes up is credit card debt. This is the total amount you owe across one or more credit cards. People often say, "I'm trying to get out of credit card debt," or "I'm drowning in debt." That last one, drowning in debt, is an idiom that means you owe more money than you can handle. It's a powerful image, and it's very common in everyday conversation. Let's also talk about cash advances. This is when you use your credit card to withdraw cash from an ATM. Sounds helpful, right? But in English-speaking countries, this usually comes with very high fees and interest. So people might say, "Only use cash advances in emergencies, it's expensive." Finally, there's the idea of credit card rewards. These are points, cashback, or travel perks that some credit cards offer. For example, I get airline miles every time I use my card, or I earned enough rewards to cover my hotel stay. This is one of the few positive sides of using credit cards, if you manage them wisely. So today we covered a lot: credit limit, put it on the card, pay off the balance, rack up charges, carry a balance, credit card statement, minimum payment, credit card debt, cash advance, and rewards. These are expressions you'll hear all the time in natural modern English. Being able to talk about credit cards fluently not only makes you sound more advanced, it helps you function better in real life. 'Cause whether you're shopping online, booking a hotel, or managing monthly bills, this is the language people actually use. Let's now talk about student loans, one of the most common types of debt in English-speaking countries, especially for young adults. If you're planning to study abroad or just want to understand how people talk about education and money, this is a topic full of useful vocabulary and real-life expressions. In countries like the United States, Canada, and the UK, higher education can be very expensive. Most students don't pay the full cost up front, they take out a student loan. This is money borrowed specifically for tuition, books, housing, and other school-related expenses. In casual English, you'll often hear people say, "I had to take out loans to get through college." Now, the phrase "take out a loan" is important. It means to officially borrow money, usually from a government program or a private lender. For example, I took out $30,000 in student loans. That's a typical sentence you'll hear from someone discussing their college experience. After graduation, the loan usually doesn't need to be repaid immediately. There's often a grace period, a short time, usually 6 months, after graduation where no payments are due. During this time, you'll hear expressions like, "I'm in my grace period right now, but I'll have to start repaying my loans soon." Once repayment begins, there are different plans available. One common term is income-based repayment. This means your monthly payment depends on how much money you're earning. Someone might say, "I'm on an income-based repayment plan. It really helps now that I'm starting out." Here's another useful phrasal verb, pay down. It means to reduce the amount you owe step by step. For example, "I'm trying to pay down my student debt as fast as I can." And yes, people say student debt and student loans interchangeably in conversation. Now, student loans can feel overwhelming, and people sometimes use strong idioms to describe their feelings. You might hear, "I'm buried in student debt," or "my loan is like a weight on my shoulders." These phrases are emotional, and they reflect how stressful long-term debt can be. Some graduates aim to refinance their student loans. We've talked about refinancing before. It means getting a new loan with better terms. Someone might say, "I refinanced my student loans to get a lower interest rate." It's a smart move if you qualify. There's also a lot of conversation around loan forgiveness. This is when some or all of your loan is canceled, often because you've worked in a public service job or made payments for a certain number of years. You'll hear people ask, "Am I eligible for student loan forgiveness?" Or, "I'm hoping my loans will be forgiven after 10 years of teaching." And finally, there's the long-term goal of becoming debt-free. This is a common dream for people with student loans. You'll hear, "I can't wait to be debt-free," or "becoming debt-free is my top priority." It's not just about money, it's about freedom, independence, and peace of mind. In this part, you learned how to talk about student loans, grace periods, repayment plans, refinancing, loan forgiveness, and the emotional experience of being in debt. We also explored real expressions like take out a loan, pay down, buried in debt, and becoming debt-free. These are phrases you'll hear on campuses, in job interviews, in casual chats, and in financial discussions across the English-speaking world. Learning them helps you not only understand others, but also share your own story clearly and confidently. Now let's focus on business loans, a powerful tool that allows people to start or expand a company. Whether you're dreaming of opening a coffee shop, launching a tech startup, or simply selling your crafts online, understanding the English around business borrowing is essential, not just for financial literacy but for fluency. A business loan is money borrowed specifically for commercial purposes. In casual English, someone might say, "I took out a small business loan to launch my company," or "We need funding to grow, so we're applying for a loan." The word funding is often used instead of money in professional contexts. You'll hear, "We're looking for funding," or "We secured funding from the bank." Now, one common type of loan is called startup capital. This is the initial money used to get a business off the ground. Covers things like equipment, rent, marketing, and salaries. You might hear, "We raised enough startup capital to open 2 locations." Another important term is working capital. This refers to the money needed for day-to-day operations, paying employees, buying supplies, or covering rent. People might say, "We're short on working capital this quarter," or "The loan helped us maintain steady cash flow." Speaking of cash flow, that's a crucial concept in business. It means the movement of money in and out of your business. A common phrase is, "Cash flow is tight this month," meaning there's not much money available right now. You'll also hear, "We need a loan to improve our cash flow." When applying for a business loan, banks often ask for a business plan. This is a detailed document that explains what your company does, how it makes money, and how you'll repay the loan. You might hear, "The bank approved our loan because our business plan was solid." Or, "We're rewriting our plan to make it more convincing for investors." Another key expression is return on investment, or ROI. This means the profit you expect to earn compared to what you invested. For example, "We expect a strong ROI within 18 months. It's common to hear this in both casual and professional business conversations. In the business world, lenders often look at your creditworthiness, just like with personal loans. but they also consider the risk of your industry and the strength of your business idea. This is why some people use collateral, something valuable like property or inventory, to back up the loan. Someone might say, "We had to put up our equipment as collateral to get the loan." Sometimes, instead of a loan, entrepreneurs look for investors, people who give money in exchange for a share of the company. But that's a different path. With a business loan, you keep full control of your business, but you have to pay the money back, usually with interest. Let's not forget about microloans. These are small loans, sometimes as little as a few $100s, offered to entrepreneurs, especially in developing communities. You might hear, "She used a microloan to buy sewing machines and start her tailoring business." Microloans can make a huge impact with just a small amount of money. In this part, we explored the world of business borrowing: startup capital, working capital, cash flow, business plan, ROI, collateral, creditworthiness, and microloans. You also picked up practical expressions like take out a business loan, secure funding, tight cash flow, and strong return on investment. Whether you're actually planning to start a business or just want to sound fluent when talking about money and entrepreneurship, this language gives you the confidence to participate in real-world financial conversations, both casually and professionally. To finish our journey into the world of borrowing, let's talk about financial responsibility, a skill that goes far beyond understanding loans and credit. It's about making smart choices with your money, planning ahead, and building a future without unnecessary financial stress. And in English, we use a lot of useful expressions when talking about money habits and responsible borrowing. Let's start with the phrase, live within your means. This means to spend only what you can afford, not relying on credit to maintain a lifestyle. People often say, "I try to live within my means and avoid unnecessary debt." It's a great piece of advice and a common expression you'll hear in conversations about budgeting and saving. Then there's the phrase emergency fund. This is money set aside for unexpected expenses like medical bills or car repairs. You'll hear things like, "Having an emergency fund helped me avoid using my credit card when my car broke down." It's one of the smartest ways to stay out of debt. Thinking of credit cards, people often talk about building good credit habits. This means paying bills on time, avoiding large balances, and only borrowing what you can repay. A phrase you might hear is, "Good credit habits start with small, smart decisions." And that's true across the board. Another helpful concept is financial goals. These are targets you set for your money, saving for a trip, buying a house, or becoming debt-free. In English, it's common to say, "I'm working toward my financial goals," or "I have a plan to pay off my debt in 5 years." Talking about money in terms of goals makes it feel more focused and positive. Now, let's look at the expression borrow wisely. This means only borrowing when necessary and being clear about how you'll pay it back. People say, "I don't avoid borrowing, I just try to borrow wisely." This attitude helps build both credit and confidence. Another useful term is debt-to-income ratio. This is the amount of your monthly debt compared to your monthly income. Lenders use it to see if you're borrowing too much. A common warning might be, "Your debt-to-income ratio is too high. You might not qualify for another loan." Let's not forget budgeting. This means planning your income and expenses each month. It's a common practice in English-speaking countries, and people often say, "I'm on a tight budget right now," or "budgeting helped me save enough for a down payment." And if things get out of hand, there's always the option of debt counseling or credit repair services. These are professional services that help people manage or fix their financial situation. You might hear, "I'm working with a debt counselor to get back on track." Lastly, one of the most powerful and optimistic phrases in English is simply this: "I'm taking control of my finances." It's about responsibility, awareness, and action. Whether you're borrowing, repaying, saving, or planning, it all comes down to being in control. In this final part, you've learned valuable real-world phrases like live within your means, emergency fund, financial goals, borrow wisely, debt-to-income ratio, tight budget, debt counseling, and taking control of your finances. These expressions are not just for financial experts, they're for anyone who wants to speak about money in a natural, intelligent, and empowered way. Thank you for being a part of the English Podcast Zone.
Hello, sir. May I help you?
Yes, I would like some information for requesting a loan.
Very well. Here are the general terms of our loan policies. We pride ourselves in having the lowest interest rate in the country for personal loans.
I see. So let me get this straight. If I borrow, let's say, $10,000, how much will I have to pay each month?
It depends on how long you take to pay it back. If we lend you $10,000 at an annual interest rate of 10% for 48 months, you would have to pay each month a portion of the loan, which is called the principal, and another small portion of the annual interest rate. This, of course, is considering that you don't default on a payment.
It sounds good, but there's just one problem. I have a terrible credit score.
That is a very serious problem, you see. The bank must assess your personal information, past loans, assets, and any other relevant information, such as your credit score, in order to approve your loan.
You know what? I don't really need the money. Thanks anyways.
All right, very good. So as you say, saving is important, and well, sometimes do you think you need a loan?
I think sometimes people need loans because they want to go into business, for example. So people who want to go into small businesses or open their own companies need startup capital. And so this is a really great example of when people don't have the money lying around and will go to find a bank that will give them a loan.
So yeah, I think it's really important, especially for the economy of a country, for business loans or small business loans to be available, because sometimes it's very difficult to find a bank that will actually lend a person money to start a business. Usually they won't have a problem with lending them money to buy a new car.
Right,
But to start up a business, it's completely the opposite.
It is, and one of the really popular trends in foreign investment right now is called micro-lending, so microloans. And that means that if I want to help people in a very poor country, I can lend $100 for someone to buy a sewing machine or for someone to buy a small computer, $500 for a small computer, and that is a microloan. It's a very, very small loan for one thing, and that can help them towards their goal of being a business person.
Right, and you're not really getting money out of it, though. You're not charging like 100% interest rate.
You're not. You're charging like 1 or 2% interest, very low interest, and you're giving people a chance to pay the money back because it's such a small amount.
Wow, that's really good. A really positive thing. Very good. So if you have any questions, any comments, or any suggestions, please come to our website at englishpod.com, and we'll see you guys there.
Bye, everyone.
Bye. The English Pod Audio Review. Listen to the meaning, then say the vocabulary word.
Percentage of the money paid to you by the bank. Interest rate. Common rules listed in an agreement. General terms. Measure. Calculate. Credit score.
Let's try that faster.
Measure. Calculate. Common rules listed in an agreement. General terms. Credit score. Percentage of the money paid to you by the bank. Interest rate.
Now say the word and hear it in a sentence.
Calculate. I have calculated the interest rate, and things are starting to look better. Calculate. Give me a moment to calculate your salary for this month. Calculate. Someone at work miscalculated my salary, and now I have to wait for another month to get paid. Credit score. I have a perfect credit score. There is no way I'm not getting this loan. Credit score. I forgot to pay my credit card bill, and now my credit score is compromised. Credit score. I really hope this doesn't ruin my credit score. Interest rate. This interest rate is insane. Interest rate. I wish I could get a loan with a lower interest rate. Interest rate. The bank's interest rate is lower than it used to be last month. General terms. I can help you understand this topic in general terms. I'm not so familiar with the details. General terms. In general terms, your behavior must improve, or else we will have to let you go. General terms. He explained some complicated science, but only in general terms. I forgot to read the fine print, and now I'm in trouble. Please make sure you read the fine print before you sign any document. I just read something in the fine print I don't completely understand. Can you explain?